Welcome back. And in our top business story, the Department of Economic Development issued and approved 14,360 business licenses last year, highlighting continued growth and stability for the Emirates economy. The professional services sector accounted for the biggest growth at 7%, followed by tourism at 5%. The Director General of the DED, Sami Al-Kamzi, stated that the amount of business licenses issued shows the high level of investor confidence in Dubai. British nationals accounted for the largest share of licenses, with 14 in 2011, followed by Saudi Arabians and then Indians. Dubai's London Business School is currently hosting leading international economist and lecturer, Professor Andrew Scott. The expert shared insights on the present state of the world economy and the UAE in particular. The economist said in 2005 the global economy was dominated by the US and Europe. However, post-financial crisis, emerging economies in Asia, as well as the Middle East and North Africa, are now showing robust growth. Among the various trend changes predicted in the future include a shift from globalization to rising protectionism, as well as more focus in regulations. Demand is also rising for equality, transparency, social concern and responsibility. He cautioned, though, the reasons that triggered the worldwide recession in 2008 are still prevalent. And although the UAE has been historically linked to the West and is also to an extent affected by the current situation in Europe, he says the UAE is on the right track with its move towards diversification.
But Europe is a third of the world economy, so if Europe has a very bad outcome, it'll definitely have an impact on the UAE. The UAE, I think, like many parts of the world, is still struggling with the aftermath of the financial crisis. Some banks are strong, some banks are weak, property prices fell and are starting to rise again, but how do you cope with a stock of unsold houses? How do you cope with banks that may still need to constrain their lending? UAE is on the right track. The great advantage the UAE has is it has the financial resources to stop this being a problem in a way that Greece or Italy don't.
Etihad Airlines has beaten its break-even target and reported a $14 million net profit for 2011, with $4.1 billion in revenues, a 36% rise recorded in 2010. So with that, let's now take a look at the stock indices across the GCC. And to talk about this in more detail, of course, we have Bruce Powers, the Head of Research at Trust Securities, here with us. Welcome to the show again.
Hello.
Now, so tell us exactly on what's been agreed and tell us about the state of pensions as well.
Well, this is the contention right now. They want to take out 300 million euros out of the pensions, cut it from the pensions, and there's disagreement on that. One of the problems is that you have the unions that don't support it, and you have an election coming up in April. So there's a lot of political issues around this, because part of the final agreement requires the opposition, the major opposition parties, the leaders of those opposition parties, to also sign the agreement in case they win in April, so they don't, change the agreement after it's already been made by the existing political system.
So what is the likelihood of a deal actually being made sort of later today, and what happens if it doesn't go through?
Well, it looks like now that there's a good chance that it won't happen. It won't get approved unless something changes within the next hour or two. They're running out of time because there is a proposal or a final documents that have to be given to the private bondholders for their debt negotiation. They're going to take a haircut on their bonds of 70%, but that needs to be done and given to them by Monday. So there's really only a few more days left before this agreement gets finalized. Actually, this agreement needs to be done now so they can get it to the bondholders on Monday in order to get the money to make the payments to the bondholders that is due on March 20th.